Alright, I'll just start in a few minutes once we have more people in the channel. So actually I'm also streaming on YouTube at the same time, so if you're encountering any issues with the Discord quality, feel free to open the YouTube stream. But I won't be checking the chat there, I'll just be monitoring the chat in live stream trading. Alright, so yeah, the agenda for today, I'll just go through an update of the market first, since we just had CPI and a very volatile move. And then afterwards, I'll be talking about what happened last week in terms of the massive drop in the market and a lot of people giving back their profits to the market and how you can avoid that in the future. And as always, we'll also go through chart requests. So any chart requests, just throw them into the live stream trading chat. Yeah, okay, cool. Let's get started then. So in terms of the current market, yesterday in chat, you would have seen that I stated 66,156 as the key level to go long from, because that is the previous low. It's the daily candle range low. So if we use this daily candle here as the range, the bottom of this candle forms the candle range low, 66156. You can see very strong buyback from that level, and we even got confirmation through a formation of an order block. Right, so the order block is the red down close candle that dug into the liquidity and swept the lows. So that is the candle, and you can see that price went back and touched it, affirmed it as support, and that's the confirmation signal pretty much. So for where the market is at right now, we actually just had CPI 30 minutes ago, which came in lower than expected, bullish for the market. So yeah, overall market is looking very bullish. I think maybe in this case, you have a higher probability of moving to new all-time highs as compared to last week, where we did not sweep any of the sell-side liquidity before moving up. So as for where the price is at right now, you can see it's at the point of control of the current local range. That's the red line. Point of control means the price points where there's been the most volume traded. So it's about 69,500. And usually the point of control acts as a magnet when price is ranging, and is also pretty much the support and resistance level. So it's currently at the point of control, which also is the 4-hour bearish order block. So I think we can expect maybe a slight retracement from here, perhaps during FOMC later today, and that can form our opportunity for long entries. Alright, so the first long entry would have been here, which is the confirmation of the bullish order block, but yeah, I wasn't on at the time, so that was missed. So the next entry would just be a retracement pretty much to fill fair value gaps below on lower time frames and continuation. But yeah, definitely overall very interested in getting into long positions. I think here would have formed, very likely have formed the bottom, just due to how it swept out the key level I was looking at. It confirmed it as the reversal level with the formation of the bullish order block. And you can see now that price is very much in bullish order flow, meaning bearish fair value gaps are being ignored, and we can expect support levels to hold. Alright, and looking at Ethereum, you would have seen in watch lists last week, I actually drew out this candle range using this weekly candle, and I stated that the 50% of the range is the area of interest, And you can see we actually got a very nice bounce from there, 3499. So Ethereum is also looking very good. And also if we use the daily candle range, you can see we swept out the high, and then we came back and swept out the low, and got pretty strong buyback from it. Okay, so same thing as Bitcoin. Bottom should be in, and it's also displaying pretty good strength and bullish order flow. In last week's stream, so that was around here, right before the drop, I was talking about how I was expecting some sort of at least a retracement or flash in the market due to the very high funding rates. If we have a look at it again now, you could see that actually the funding rates aren't actually very high right now. It's pretty much about neutral. So that sort of gives us some further confirmation that the upside will probably continue over the next several days and week or so. Right, in comparison to last week, if you check the watch lists, you would have seen that all of this was red. The funding rates are all above the neutral percentage of 0.01% on many coins. Right, looking at Bitcoin dominance, we're pretty much at the range highs here, and you can see it's starting to calm down a bit. That's also a bullish sign, because usually in more bullish conditions, we want altcoins to be moving as well, and not just Bitcoin. That also contributed to why I was not really willing to long last week, because Bitcoin was moving up a lot, whereas altcoins weren't really moving much at all. So Bitcoin dominance is looking like it's going to head down as well. Right, so that's the market update for now. We'll go back to it in a second, a bit closer to New York Open in 20 minutes. I'd like to move on now to talk about what happened last week, because I know that a lot of traders got wrecked or gave back a lot of their profits during the week. So let's just talk a bit about what happened there, key takeaways, and pretty much just how to avoid that sort of situation in the future. Right, so firstly, it's quite important to identify what state the market is in. And you can see that we've been stuck in a range for quite a while now, right, between about 59,000 to 71,000. And then even during last week and like the week before, you can see it's formed a more narrow trading range. And remember that when the market is in ranging conditions, we want to be bearish at range highs and bullish at range lows, right? So buy low, sell high, not the other way around. And one way to kind of objectively decide if price is high or low is using the volume profile, right? So this is basically the volume bars and the dotted lines here. On TradingView, click Fixed Range Volume Profile, and then you anchor it from the beginning of the range towards the end of the range, as in the current price. And the key levels to note would be value area low, value area high, and point of control. Value area high, if price is above, like it was here, you flip your bias to bearish, because price is considered in deep premium, so price is considered high. And when price is in value area low, we want to be bullish because price is in discount, so price is low. Okay, so you don't want to get sucked into the hype, the FOMO, and the overwhelming sentiments all over Twitter. You want to be rational and consider the chart objectively. And I consider this to be one of the best ways to be objective with your chart analysis, especially when the market is in ranging conditions. Right, so basically the problem last week was that the market was still ranging. Right, there was no confirmation of a range breakout. Right, we're still at the range highs. We're above value area high. Yet the sentiment was extremely bullish. Many people all over Twitter were calling for new all-time highs, getting extremely excited to long, and just basically longing non-stop all the way up. And that basically just sets up extreme long liquidity. Right, a lot of people are overexposing, cranking up the leverage, and all of that. Right, basically just overexposing and basically just setting themselves up to get liquidated on a sudden flush. Hope that all makes sense so far. If there's any questions, just let me know in the live stream trading chat. Okay, awesome. So that's the technical analysis aspect of this. Right. Firstly, identifying the state of the market, ranging or trending. Usually it's ranging. Secondly, using the volume profile to identify value area high and lows, and then objectively looking at where the price is currently at. What else was there? So I think I also wanted to speak a bit about risk management. Yes, so for Bitcoin, the longs exit range will be, like range highs pretty much, right around here. But since we just swept out the range lows and also bounced very well from the value area low, we can expect this pump to go on for a bit longer. Right, so I also wanted to discuss, on top of chart analysis, what else you can do to kind of anticipate these sudden drops in the market. And that is through funding rates. So I have this page bookmarked, coinglass.com/funding rate. And as I said before, if this whole thing is red, that means people are longing with extreme exposure and leverage, and just setting up for a flush across the market. Alright, you can see comparatively, funding rates are quite neutral this time. So it's more of a healthy pump, one sustained by spot bids rather than futures bids. Right? You want price to move up due to people buying spot, not because people are doing 100x leverage on futures. Spot buyers are less likely to sell. Futures longers are more likely to get liquidated and force the price to go down. That's the logic behind it. Right, and you can see last week, right, if we use the replay tool, you can see like it's really easy to get sucked into the hype because like the entire week, Monday to Thursday, price was just going up non-stop on Bitcoin, right? So it's very easy to be bullish here, all these green candles and stuff like that. So have your value area high marked out. Also have the local highs, previous old highs marked out, and see what happens when these levels get touched. right? If it gets clean broken through, like a breakout, or if it forms a swing failure pattern, which is wicking above, closing below, which is bearish. So let's have a look at what happened here last week on Thursday and then Friday in terms of these highs right here. Right, so you can see we had NFP, non-farm payroll released, price rigged above these highs here, immediately rejected and began the flash out and downtrend. Right, and then what do we do after price dumps? Right, we have our key levels marked out. So for me, it was the daily candle range low 66156, daily fair value gap 64567. Right, so really the first zone I was looking at was 66156 because it also had the confluence of being the value area low, which is where we wanted long. Right, so we wait patiently. So this was the weekend, nothing was going on. And then we had Monday open, and you can see price continued to move down. So that's why you don't long every single dip and think you bought the bottom. You wait for your key level to be tapped, and you wait for buyback and signs of a reversal. And signs of a reversal is bullish order flow on lower time frames. Okay, so yesterday we had this key level tapped, and then it formed a bullish order block, the red down close candle that swept the sell side liquidity. We want this order block to act as support. You can see it dug into this order block and held the support. So that is the first sign of bullish order flow. Okay, so that would have been the first long entry point. But since I personally missed that entry and prices are now at the point of control, local resistance, I will now wait for a retracement. So that's basically any support sort of levels on the lower time frame, such as this 1 hour order block or fair value gap between the current price down to 68,000. Okay, so you can see all of that, right? Makes it very objective. It makes it so you don't rely on the sentiment of other traders to guide your decisions. It ensures that you don't get sucked into all of the hype and the FOMO and accidentally overexpose yourself to too much risk. Okay, so definitely if you had longs before and then it moved into value areas high, and then the bias is meant to be switching bearish, that's when you start closing longs aggressively, reducing risk, and basically not opening new long positions, waiting patiently for a flush out of the market, especially when funding rate is extremely high. Alright, so I'll now speak a bit more about counter range theory, so the sort of analysis aspect of it all. Yeah, so comment from Ahmed, waiting patiently is the biggest challenge, and yeah, I definitely do agree with that. And personally, I experienced that last week as well, because Monday to Thursday, every single day was pumping, right? And then we finally got the flash out on a Friday. So it really shows that patience is one of the key skills in the markets. Just basically having your plan, having your conviction, and sticking to it. Yeah, I did have a bunch of shorts. It was actually really painful to hold through it because they were stuck in drawdown, right? Because the price was always going up. But I had my invalidation point, which is clean breakout above 72,000, so I just held it through. Yeah, exactly. It was pretty bad for 4 days, and suddenly on Friday, like just basically in one go, all of the targets got hit very quickly. So that's just how trading works sometimes, right? You have to wait a while for the plan to play out. But if you do stick to your plan and act objectively and rationally, you do end up getting rewarded instead of giving back profits to the market. Right, so just talking a bit about candle range theory. The core concept behind it is that every candle can act as a range, right? We usually use the higher time frames for all of this, and for the candle you select as the range, that's basically where the difficulty comes in. But usually you want to select the larger candles, right? Because the larger candles form the local range. And how about the core logic behind candle range theory? Right, it's basically power of 3, accumulation, manipulation, and distribution. So you can see the higher time frame chart looks like this. Right, this previous candle is the range, wick above, close below, and moving down to the bottom of the range and sweeping out the other side of the liquidity. And then if we look at it in terms of the lower time frames, you can see accumulation, manipulation, and distribution, the expansive move to the downside after sweeping out the highs. Okay, so that's the logic behind candle range theory. In terms of finding a good one to use, inside bar candles is one way to do that. Basically, smaller candles within the range to generate interest, right, to be the accumulation of the PO3. And then we respond accordingly when one side gets swept. So if the candle range high gets swept first, we are bearish, and we look for a sweep of the candle range low, like so. Another way to improve the probability and selection of the candle used as a range is alignment with a higher time frame key level. So you can see this candle here tapped into the key level, higher time frame order block, and that gave additional confluence. Right? Basically, higher time frame support giving additional confluence to the trade. So all of that is theory stuff. I'm going to go through some crypto examples just so all of you can kind of see it in action. So there's been actually quite a few examples of this playing out very nicely. I'll begin with Ethereum. So if we use this candle as the candle range, because it formed a large range, then you can see that it created a few inside bar candles to generate interest. It swept out the range highs, and then it swept out the range lows. Also, another thing to remember is using these sort of candles as ranges, the 50% threshold can act as the support. So you can see here that the 50% 3740 actually acted as support for quite a few days before it broke through, and then price tapped into the candle range low. You can see that it also works on all time frames, right? Even the weekly chart. And I've shown this before, so using this as the weekly candle, you can see that the 50% threshold acted as support. Right, example on Bitcoin. We can use this candle as the candle range, and you can see that it swept out the highs, although it had a few candle closures above, but nonetheless price eventually came back down and swept out the low of that candle. And another really good example from what I can remember was Pepe Coin. Right, you can see that I held pretty much called the top of Pepe Coin when it formed its all-time high. So there was literally no price action from before, which we can use to identify as resistance. So how is it that I was able to identify the top of Pepe Coin when it formed new all-time highs? And that's exactly through candle range theory. Alright, let's have a look. We can use this as the candle range, and you can see the next weekly candle wicked above and closed below, which is bearish. And then you can see price went straight down from there. And then it reacted from the daily fair value gap. Okay, so in reality, it's actually not that complicated. You just basically choose a candle on the daily time frame and the weekly time frame as your candle range, and you react only after one side of the range gets swept. As for this particular trade setup, it was basically based off the weekly high swept, formation of a bearish fair value gap tapped into and held as resistance, and then holding the trade until the tap of the daily fair value gap. And you can see this actually played out previously on Pepe Coin as well, using this candle as the candle range. You can see that the next weekly candle wicked above and closed below, and then it eventually swept out the weekly low of that candle. And you can see pretty much the same thing here using this weekly candle. Alright, so hopefully that kind of makes sense. I'll definitely be talking more about all of this stuff in watch lists if I do identify it, and I think some more examples will definitely help you guys with applying this concept. But definitely I find it to be quite powerful in terms of helping you actually identify the liquidity in the market. And just real quick, another example on Render Coin using this weekly candle here. Right, you can see this weekly candle swept out the high of this one, wicked above and closed below, and eventually the low of this candle got swept out as well. Right, is there any questions so far from what I was going through before? So the last thing I also want to talk about is risk management. And a really key part of risk management is knowing how much you're risking in a trade before you even open the trade. And one way you can calculate your position size is using this tool here, cashbackforex.com. You type in your entry point, your stop loss, and then your allocated risk dependent on your account balance, and then it calculates your position size. right? And pretty much the idea is that you don't want to risk more than, say, 10 to 20% of your account at any given time, right? So if you're risking 1% on each trade, you don't want to open more than 10 trades at a time. So it's really important that you keep an eye on how much open risk you have. Just so in the worst case scenario, if the market just goes completely the wrong way, everything gets stopped out all at once, then you're not completely wrecked, right? Just so like you know the maximum risk open at any time. It's actually a really common problem with, especially with new traders. They get overly excited with market movement, and then they just keep opening more and more positions without knowing how much they are risking in each trade. And then what ends up happening is that they're completely overexposed, over leveraged, and then on a flush out, the entire portfolio is wiped out. So that's why it's quite helpful if you can use a tool like this one here to be consistent with your risk management, right? Risking a consistent amount in each trade based on your trade invalidation point. So this means larger position sizes for scalps where you're using tighter stop losses, and then smaller position sizes for swing trades where you're using wider stop losses. Right, that's basically that's like the basics behind risk management. And yeah, that pretty much covers the first part of the stream I wanted to go through. Happy to go through chart requests now. If you guys want me to check any of the charts, just throw them into the live stream trading chat. Yeah, so YOLO trades, if you don't know what you're doing, obviously not a good idea. But interestingly, like some of the larger traders out there made it big by increasing the risk when they're high in conviction. Right, so if they're very confident on a trading setup, they might be willing to risk more than they usually would. And that basically applies to the general idea that like during trending conditions, during like when the market conditions are very easy to trade, that's when you can risk more. And then when things get choppy and it's not favorable to your strategy and things like that, that's when you start to risk less. Okay, awesome. Yeah, I'll go through the chart requests now, starting with INJ, KNC, and ApeCoin. Okay, yeah, INJ is definitely going quite crazy here. Yep, not too much to say here. Very bullish here. So I previously marked out this blue zone here as the key level. That's the resistance support flip. And you can see that price momentarily went below but closed above. So that's good. You can also see previous range lows from January and February at 30.27 has been reclaimed. So that's very good as well. So at this point, pretty much, we look for a retest of the reclaim, and we swing long pretty much. You can see very clearly, right? It has broken out of the previous range. Okay, so that's done, and now it's back in the older range, back in January to March, and you can see the upside potential here. So yeah, very bullish. Be looking to get into a position for INJ pretty soon. KNC. It's been very choppy recently. Let's just clear up the chart a bit. Alright, so in terms of the key levels, it's looking pretty good as well. Right, you can see the previous range lows has been reclaimed and retested. Previous resistance has flipped into support. So KNC is looking quite good as well. I can see it going parabolic if Bitcoin is able to hold steady. So yeah, KNC looks pretty good as well. Higher time frames, you can see weekly fair value gap has been filled, so that's good. So next we're looking for the other weekly fair value gap, 0.82. Alright, so I'll look at ApeCoin and then Dog with Hat and Turbo. Yeah, so from my memory, ApeCoin has been pretty dead for a while, and yeah, that confirms it. So yeah, I'm personally not very interested in trading this. You can see like how much weaker this chart looks compared to the other two charts we just looked at. Right, it's still at the range lows. It's pretty much almost at all-time lows. It's been stuck in the range since a while. So I don't really expect ApeCoin to move that much compared to other coins for now. So not too interested in this one right now. Alright, Dog with Hat. So you can see that the analysis from last time played out quite nicely, right? This blue box as the key level, deviation above, bearish order flow, and movement back down to the range lows. And now it's bouncing from the range lows. Yep, so you can see if we use the rolling profile, it has bounced and reclaimed above value area low. So that's good. So what we expect next is value area high and maybe another attempt to break above this level. But pretty much the key resistance zone is 3.19 to 3.54. If price can do something like this, then it can continue moving up. And question about if it's a good time to short Bitcoin and Ethereum. So personally, I'd rather wait for longs rather than shorting, because we just stripped out a key sell side liquidity target, so the downside target is gone. The drawn liquidity is gone for the downside, so there's no reason to short it. So I would prefer to wait for longs. Alright, so let's look at what Turbo is doing. It seemed to be holding that for our order block. But the bigger picture is that the pump is over, the interest is slowly fading. So I personally would rather look to long something else, because it seems that the prevailing trend for a while will be towards the downside. Right? The interest of the pump has cooled off since this coin has been listed on major exchanges like Bybit. So what we can possibly see is sweep out of buy side liquidity and then trend continuation. Right, you can kind of see these equal highs here. So something like this for Turbo. Yeah, Notcoin, similar thing, right? Pump is over, interest is cooling off, prevailing downtrend, and occasional short squeeze on the way down. So what it looks like is something like this. Since Bitcoin is quite strong, it can possibly go to these highs as well, 0.023. But eventually, every pump will end up fading. That seems to be the most likely scenario with these sort of coins that have pumps like crazy for a while, and then the interest cools off. Let me see if I can pull up a similar sort of example here. Right, so I think TRB is a pretty good example. Right, just pump is over, downtrend, and short squeezes. So wicking above to sweep out short stop losses, but eventually just moving all the way down. Although the TRB is a bit of an extreme example because it was manipulated quite a bit. Right, is there any other chart requests? Yeah, all in all, actually, it looks very promising to just move all the way up to the previous highs. You can see this area here was the sort of manipulation accumulation phase, and then now it's beginning its bullish order flow and expansion phase. You can see the higher time frame order flow is still very bullish. You can even see that the EMAs on the higher time frames are crossing over and converging as well, which is a bullish sign. And you can see, like, pretty much right here, 4-hour fair value gap and daily fair value gap gave a very nice reaction, so that's good. Yeah, I think it's looking pretty good for a long entry. So in terms of the actual entry points, I think maybe after FOMC, because I think FOMC might give a pullback to the market, because it's pretty common for back-to-back news events to sort of do the opposite thing. Right? So for example, we just had CPI today, like an hour ago, and then we have FOMC in about 5 hours, I think. So FOMC might give the pullback, and then the next few days and over the next week or so, we get the upside continuation. In terms of the actual charts, we probably need a few more candles to form, but basically any fair value gaps on the 1 hour time frame should be a good entry point. So right now it's shaping up to be an entry range between 53.2 up to 55.48. So that's a bit of a wide range, but overall I only expect a shallow pullback and then continuation. Same thing on the other coins we analyzed before, on INJ, KNC, and RIF. Let's move on to Pepe coin and the other meme coins. Right, so the bias on Pepe coin has flipped bullish now because it has fulfilled its sell side target, the key level I was looking at. So we can delete all of that now and focus on the current price action. Let me just check the Bybit chart as well. Yep, so daily fair value gap was filled on Bybit, but not Binance. We'll use the Bybit chart for this one. But yeah, you can see this daily fair value gap, also the support, resistance support flip gave a very nice reaction. So the bias is bullish on Pepe coin because the downside target has been fulfilled. So we look for longs. 4 hour time frame, we have the beginning of break of structure and EMA crossover and convergence. So that's good. Right, break of structure, price forming a higher high. So yeah, similar viewpoint to the other coins, looking for a shallow pullback into a long entry point. And pretty much we can just use like a fair value gap on the 1 hour time frame as our entry. Might as well look at the other meme coins. So you can see Bonk got bonked down with Pepe coin because coins within the same sector generally move together. So Bonk and Pepe coin are both in the meme coin sector, so they follow each other. Similarly, then Bonk coin, the bias is also bullish. This daily breaker block has held as support quite well. Moving down to the 4 hour time frame, we also have the signs of a EMA crossover and convergence, and also a breaker structure. So we look for an entry on a fair value gap on the 1 hour time frame. Okay, so plenty of time still to get into long positions. I think we are also setting up for a green weekend this week, probably with shitcoins moving quite a fair bit as well. So we'll be looking for long entry points on meme coins. Yep, so the blue box here, if you're referring to this is the daily breaker block. A breaker block is a failed order block. In simple terms, a breaker block is basically a resistance support flip. Previous resistance flipped into support. Right, and okay, let's move on. So meme, we have the sweep of the range lows now, so that's good as well. And in the ranging market, we expect price to move from range lows to range highs. So meme coin, although it doesn't look as strong, it's still fairly bullish. In terms of the basics of market structure and things like breaker blocks, we have our own resources on that in the video lessons library, which is for our paid members and members on a trial of the elite membership. I can see that you're currently on trial ended, so do consider if a membership is right for you, and if it's been a while since your trial, you can also reach out to our team to request for a reset of your 14-day free trial. But yeah, if all of this is quite new to you, I recommend going into the video lessons library and then going to the post which says Smart Money Concepts Made Simple. That's where I go through all of these things like market structure and order blocks and breaker blocks, things like that. But yes, the area you were talking about before was previous resistance flipped into support. Alright, so I'll also look through some other large caps, because obviously a lot of us trade things like Solana, AVAX as well. Okay, we can use the candle range concept here, using this previous weekly candle as our range. You can see that the previous week low has been swept and price is likely to close above, right? So wick below, close above is bullish, and we look for a move to the previous week high, 175.70. Next, this is the order block. So we look for a move away from the order block and a confirmation of this order block as support. So yeah, Solana is currently running into some resistance here because we have the previous range lows here, but definitely I think we can also look for a long entry at a retrace on Solana. Yeah, I'll look at Velo. Sorry, 1 second. Alright, so So Velo is bouncing from the daily fair value gap. So it looks like the downside target for it has been reached as well. Next, you want to look for confirmation of bullish order flow. So a candle close above the 4-hour fair value gap. And then from there, we can see if longs are worthwhile. But right now, no entry on Velo, but still bias is leaning bullish. So we want to see something like this. Let's have a quick look on AVAX. Alright, thanks for tuning in, Ahmed. See you next time. So AVAX swept out the range lows and is now attempting to reclaim the value area low. So it's similar sort of situation to Solana. We can definitely look for longs pretty soon and look for a move back to the range highs. Right, just keep it simple in range markets. Range highs to range lows and then back to range highs. Render, I marked out this daily order block, but it did not get tapped. But it did sweep out this candle low here. So that means we do not necessarily get the tap of the daily order block before seeing a move up. But you can kind of see a Peer 3 here on Render. This is the manipulation, and this is the previous range lows, 9.412. So if price reclaims above this range low, we then enter into the distribution expansion phase, something like this. Okay, so that's something to watch out for on Render, just a classic Power 3. So yeah, a lot of coins on the watch list right now for long entries. So from what we've seen so far, INJ, KNC, meme coins as well, with Pepe and Bonk. And in terms of the large caps, Solana, AVAX, and Render, just a few more candles to form, some extra confirmations, and we can look for longs as well. Yeah, exactly, David. So front-running liquidity is very common in bullish scenarios. Alright, but for the immediate short term, you can see that price is still stalling at the point of control, this red line, the price point where the most volume has been traded. So since I missed the long entry from the top of this bullish order block, I'll just be waiting for after FOMC, so probably the next Asia session tomorrow, to scan for long positions. But pretty simple stuff for now. We just look for longs on strong setups. Right, so any other questions or chart requests? So I also just wanted to talk a bit about the new initiative that we are doing with trade reviews. So if you check the announcements of our Discord server, we'll be running trade reviews in Strategy Chat. So we encourage all of our members to post reviews of any of their past trades, winning or losing trades, and just basically discussing your trade setup, your execution, and just like a short reflection of what went well or what went wrong and what you learned from this trade. And pretty much the idea behind that is David and I will go through all trade reviews and providing some feedback to help all of you learn and grow as a trader. And to kick off this initiative, we'll have monthly rewards as well. So I'll be picking 3 trade reviews during the month of June. One person will receive 100 USDT and 1 hour free mentorship, and 2 other people will receive 1 hour free mentorship as well. So definitely hope to see some members posting their strategy chat and basically just getting into the habit of reviewing their past trades and actually learning from them, and yeah, basically just not repeating the same mistakes and improving their analysis techniques and trade management. So yeah, very keen to see some trade reviews from you guys being posted in strategy chat. Also, starting from next month, I believe, David will be holding a live stream, maybe weekly live stream, where he goes through trades. So you can send in your past trades in DMs, and then he will go through the trade live on stream. So it's basically a group mentorship session where we go through the trade setup, analysis, and execution, all for the purposes of learning from past trades, learning from what happened, and implementing them in your future trades. Later this week, I also intend to release a short video on candle range theory. So I went through a bit of it today. You can see how helpful it is for identifying liquidity zones and basically identifying tops and bottoms. So watch out for that. Once it's released, it'll be posted on in the video library and also watch lists. And yeah, I hope this stream today was informative. Hope you all found it helpful. Alright, the main thing that I really wanted to make clear was just how to avoid the carnage from last week, how to avoid giving back all of your trading profits, not to get sucked into all of the emotions in the market and acting rationally. This stream will be available on YouTube for future viewing as well, so if you want to go back to that, feel free to do so. We also have relevant educational posts previously and previous streams going through the same fundamentals of trading. So those ones would be the webinar Insights for New Traders and Navigating Market Conditions, and also the webinar Achieving Consistency in Trading, Multi-Step Analysis for Trade Setups, and also our stream from January, Tips for Trading in a Bull Market. So definitely recommend you guys to either go through the PowerPoint for those webinars or watch through those recordings, and basically just taking note of those things and just ensuring that you're well equipped for trading this bull market, because definitely this bull market has been much more difficult to trade than the previous cycle ones, like in 2021, 2017. Right, you gotta be a lot more patient, cautious, and rational to ensure you can hold on to your trading profits. Okay, awesome. Thank you guys very much for tuning into this stream today. I hope to see you all again next time. So I'll be streaming on Wednesday, New York Open, So yeah, hope you all have a nice week and see you all next